Hello all, this is Nifty's daily chart. Here we are going to discuss a couple of things. As you can see, MACD has turned positive given the crossover. Histogram is also positive and we are experiencing WXY wave. Y wave has went below 0.236 Fibonacci and currently I'm expecting it to move upwards as X wave and then drop as a Z wave on the downside. We don't want Nifty to yet go upside because there is a possibility that we might have completed correction as a Y wave and it can break upside. Okay, so until 18,600 is not broken, I want to leave that as one more round of correction of X wave and Z wave. Here there are no divergence seen on a daily chart. As you can see, MACD has also made low, price has also made fresh low. So this case gives us the consideration that there could be another way down and MACD could go up and make a divergence, then thereby breaking on the upside. So that would be an upside case. So for now we are expecting it to reach towards 17,500 with this chart. So that's the possibility of the channel. It can even go higher, touch this line and then drop. That is also possible case. So there are no limits for the upside as of now because we do not see any retracement, so we cannot conclude where it will go. I was expecting a move like this, but I was expecting a move like this and then a drop like this, but that seems to be, it went up very high. So this case is looking bullish zigzag correction as X wave. So let's check the current move. So today's move was this 1 2 3 4 as a triangle and 15 progress. It has broken upside from the triangle. So the minimum expected target is 17,000 as per this chart. So as per wave 1 height, wave 5 would be equal to that height. So it can very much go upside, there is no doubt about it. It can go upside and I'm expecting minimum target because there is a negative divergence on 15-minute chart. But yeah, it can still go upside. Sorry if you hear a low voice, I'm recording very late, so that's why. So here you can see that I'm expecting 17,000 a minimum target. It can go up, but yeah, there are two cases from here onwards. So one is bearish case, one is bullish case. So let's first discuss the bearish case. Considering the bearish case, I'm expecting minimum targets on the upside. I'm not giving big targets immediately because the bearish case is like this, where we are expecting this to be a leading diagonal pattern 1 2 3 4 5, and this will be called A, then it will go down, this will be called B, then again it will go up as a C wave. So this is one of the bearish pattern where we are expecting. Fifth wave is in progress right now, 1 2 3 4 completed like this. So fifth wave should not go beyond 17,025. That's what I'm expecting in this pattern of leading diagonal, and there could be a fall on the downside minimum towards 16,500, then 16,200 levels. So yeah, here why I'm saying that it should not go beyond 17,025 is because third wave cannot be shorter than fifth wave, because wave 1 is already big. Okay, so there is a Elliott wave rule that wave 3 should be greater than any of the waves. Okay, either it should be greater than wave 1 or it should be greater than wave 5. So wave 1 is already greater, so wave 5 cannot be greater. So if it crosses 17,025, then this leading diagonal pattern will be invalid. Okay, so this chart will be invalid. If it starts the drop tomorrow and then breaks this 16,840, let's say tomorrow it opens near 17,020 and then drops on the downside breaking 16,840, then we can assume that the fall has begun, and this was the leading diagonal wave completed near 17,020. So that's what the assumption will be, and the fall will be minimum toward this, maximum toward this. That's what we can assume in the bearish case scenario. So tomorrow it can open small gap up in this case and then it can start the drop. So that is the case that we are assuming. Here you have to notice that 470 is almost the length of third wave, so fifth wave should be shorter than this. So somewhere around 17,025 to 30, if it gaps up above these levels, then this case will be invalid. Then our second case will kick in. So the bullish case is like this. Here we are saying that this is A wave completed here and then B wave completed here. So instead of triangle, we are assuming this as a zigzag, and this again wave as a 5-wave structure, or you could say 3-wave structure. Anything is possible here. It can be ending diagonal as well, or it can be a fresh impulse as a C wave as well, going towards 17,533. So since the wave 1 was prolonged, I'm not going to assume C wave will complete here itself. So I'm considering 17,500 as the next level for Nifty. So here I'm assuming impulse case or an ending diagonal case. Okay, so in both cases we should go beyond this. So let's say if we go 17,150, then we can assume that 17,500 is coming, because it should cross this with bigger margin. Let's consider even 17,160. Okay, so it should go upside with bigger margin. So tomorrow if it opens above 17,030, then we can assume that it is going for minimum this target initially. Then if it crosses this by bigger margin, we are going towards this. So that's what we can assume. Yeah, and another case is if it starts gap down, if it drops downside, then we have to assume that, like, if it opens gap down and breaks this level of 17,840, okay, if it breaks that, then we can assume that the fall has started. So that is another case that you need to remember. So the fall will be started. In that case, it will be a previous bearish case. So yeah, that's how we are looking at Nifty for now. It's looking for upside as of now, and we would be heading for upside. That's what our view is. So if it opens gap down also, you know what to do and for what level you should be waiting. So 16,840 break, you need to wait for downside. Okay, so these are the cases that we discussed. Okay, let's check the option chain data. I'm using Sensible to check the option chain data. So here you can see 16,000 is a major support with 87 lakh put writers. Then second biggest is 16,500. After that, what we have, 16,900. So here you see there were very huge put writing today happening on 16,900 and 17,000 strikes. So yeah, this has become a major support as per the put open interest. Okay, and here for this expiry, the major resistance is 17,500 and 17,000 is a second major resistance. So this is the biggest number, this is the second biggest number. So if this is to be crossed and Nifty is sustaining above 17,000 for longer time, then it will move up towards 17,300 and then it will move towards 17,500. So this is how the option chain data will work. But this is the 17th March expiry. Not expecting in 2 days it will go to 17,500, maybe max 17,300 it can go. So expiry could happen near these level, near 17,300, and next expiry maybe in next expiry's first 1 or 2 days we would head towards 17,500. So that's what we can conclude. So today, as you can see, there was heavy put writing on all these strikes, and yeah, the support is shifting higher as we discussed in our last video. So 17,000 is at risk right now. So as soon as 17,000 call writers starts covering their position, it would cover short covering rally and it would take Nifty towards 17,300 levels, and then after that it will take it towards 17,500. So this is how the option chain looks like. So hope you like the analysis. Thank you. Have a great day. Bye bye.